Welcome to Sampath Sustainability Talks. I'm here today with the Chief Transformation Officer of the Sampath Bank PLC, Dr. Lalith Weragoda, to talk about sustainable transformation and remuneration-linked climate performance in relation to SLFRS S1 and S2. Lalith, as SLFRS S1 and S2 became mandatory last year, the sustainability reporting in Sri Lanka marked a significant shift in how banks and corporates report and manage their risks of sustainability. Now, tell us how these climate-related financial disclosure standards fundamentally reshape the banking sector.
Yeah, I think very good opening question. Let me explain it a little in a different way. If you get the SLFR S1 and S2, it's a mandatory requirement since last year for top 100 companies in Sri Lanka. And therefore, we need to disclose in line with the SLFR S1 and S2 standards. But for me, it is not just a disclosure requirement. If you really analyze, it's all about how we are going to incorporate climate risk-related factors into our business model. It is all about when we are taking business decisions, how we concern about the sustainable related variables. If at the strategic level, if you really study, our core business is investing, giving financial requirements for our investors. At the time of investing, so if we can incorporate environmental and social variables also into our model, we take more sustainable, more futuristic decisions. So therefore, the bank financial organization influence entire business community, not only business community, entire society, drive towards in line with sustainability principles. So at operational level, so we incorporated sustainability related variables into our business model. So we train already our lending officers. So whenever our customers request, demand funds, so when we are releasing funds, we consider these factors also. So in this way, we believe that we can influence entire business community to align with the sustainability principles.
So Lalith, as we continue our chat on sustainable transformation and remuneration-linked climate performance, would you tell us how the Sampath Bank is cultivating this purpose-driven culture to embrace climate-related disclosures? And how are your employees empowered to actively contribute to climate action and sustainable transformation initiatives?
Yeah, I think this related to my first question also. So as I told you, implementation of the SLFRS S1 and S2 is not just only a disclosure requirement for Sampath Bank. To be sustainable within the organization, it should be part of our culture. Because for me, culture is, I consider as a source of competitive advantage. To be sustained, this concept in a bank, this should be a part of our culture. Let me explain you one by one how we inculcate this practice into our culture. At board level, we took a hard decision because we believe that this kind of changes should come from the top. We set up a board level sustainability committee governed by the board and senior members of the bank, and they involved at the policy level and take decisions. Then operational level, we had a committee. We set up a committee representing all key business members, and in down we have a separate functional groups to handle this one. Therefore, we have a very sound, powerful governance structure to drive this concept. Number one. Number two, culture you can't teach by force. It should come within the people. People must feel it. So people must feel it's the way we are living. So therefore, volunteerism. So we believe that to bring this concept to this country, our 4,500 team members must follow these principles. Therefore, their volunteerism is critical. So we started a couple of projects where allow our people to engage with these activities. Through this, we believe that they are actively involved. They know the fundamentals, they know the concepts, they know how the macro impact of this concept. So through this. And at a latter level, we have introduced climate risk related KPIs. In other way, so incentives. Now it's linked to their day-to-day life. Not only day-to-day life, we go beyond and it's linked to their performance. Wherever they behave, they demonstrate sustainable related behavior, we recognize, we reward them. through these kind of initiatives, it's going to be a part of Sampath culture. Once it become a part of culture, so it sustains. It's difficult to change. Therefore, I believe that for Sampath Bank, this is again not just another initiative. This will guide our future. In future, there's no difference between business and sustainability initiatives. Doing business means all about how to ensure sustainability of the business. So this is the way we have incorporated this concept into our business.
Lalith, so we're talking about sustainable transformation and remuneration-linked climate performance. Now, what does remuneration-linked climate performance mean? And what measures are in place to link climate and sustainability performance indicators with reward structures at the Sampath Bank?
Yes. I think when I answer for the second question, I explain you that how we incorporate this concept into our culture. The one aspect is to how we link this concept with our rewards scheme of the bank. As a bank, we have a bank-wide performance management system. It's a very tight one. But we took a very hard strategic level decision to give certain space for sustainability related KPIs also. That is number one. Giving space in our scorecard for this event is also one of the critical tasks, because our core business is banking. So, but we realized that we can't do banking without considering this concept. Therefore, we allocated certain percentage of KPIs for sustainability related KPIs. And number two, we started with this one with the key senior members. So they are the people, their behavior personally we need to incentivize. So we introduce KPIs and created a milestone to incentivize their activities. So I think this is the way we institutionalize this concept. Now it's not only volunteer, it is part of their business. At the same time, when they are doing their business, we monitor at the end of the year, quarterly, their achievements, and we incentivize in line with their achievements. So you can see how very carefully we integrated this concept into organization. I think first step is to introduce for the senior leadership level. Then gradually it cascades into other levels as well. Finally, gradually over the time, we expect that we are going to introduce this KPI for entire organization, and it will be a mainstream matter in future.
Lalith, we are still on the topic of sustainable transformation and remuneration-linked climate performance. Now, you spoke about taking a deliberate step towards aligning leadership rewards with your sustainability ambitions. Now, this is a significant shift. How does Sampath Bank transform its systems to implement SLFRS S1 and S2 to enable an effective shift of a mandatory standard?
Kumar, implementation of SLFR S1 and S2 is not the overnight project. It is a result of the 2 years continuous planning and implementation. It's a very systematic step-by-step implementation. So first we try to understand what is SLFR S1 and S2 and how it will affect to our day-to-day business and what kind of strategic results can we generate out of this. So that is why I told you at the beginning, this is not just a mandatory disclosure requirements. Then we set up a right governance structure. At board level, we set up a committee, governance committee, then a management level, strategic level committee, and operational level committees we set up. We prepare governance framework. Then we had the biggest problem is the knowledge gap. We train respective teams at different level, and finally we align all together, and now it is a mainstream matter to resolve. So if you really study the secret of successful implementation of these two disclosed in Sampath Bank is very careful systematic planning. We plan very properly in order to achieve our end results.
So we're talking about sustainable transformation and remuneration-linked climate performance. Lalith, tell us, how does the bank balance traditional financial risks with emerging sustainability-related risks to ensure long-term resilience and regulatory compliance?
Yes. Normally, if you really study banking models, bank is all about their when they are lending, right, when they are investing, they consider, they assess financial risk and credit quality and liquidity. Those are the conventional variables they consider. Even later, right, even at the before beginning of this practice also, so we try to analyze financial risk and climate risk separately. But now it's completely different. So we need to consider financial risks as well as the climate risks together. So through integrated risk analysis model, we now, when we are taking financial decisions, we analyze both aspects together, not separately. I think this is the beauty of this model. If we consider one factor alone, you can't see the big picture. When we are investing, yes, of course, as an organization, we need to consider credit worthiness, credit quality. But we can't ignore social and environmental aspects. So therefore, we consider both. Both are critical. To our short-term survival, financial risk is important. For our long-term sustainability and as a country for our future, long-term, how this investment affect to our customer, our community, our environment, other factors are also important. Therefore, integrated risk management model which represent environmental risk as well as financial risk. I think this is the future. Actually, this is the future model that we have already implemented.
You've been talking these past few chats on sustainable transformation and remuneration-linked climate performance. Now, how do you think public disclosure of climate-related targets enhance the trust of your stakeholders?
Once we set objectives, if we are not disclosing it, no point of having objectives. Objective itself gives a sense of motivation. At the same time, once we disclose it, you are accountable. As a corporate, as a responsible organization, we need to achieve it. Therefore, setting objective is one side and disclosing it is another side that will enhance our trustworthiness. Then our shareholders, our stakeholders, and they can monitor whether we are achieving this one. So therefore, for me, setting objectives and disclosing it both are equally important. Let me explain this one with a simple example. This year we set the two objectives, environmental related objectives. One is to increase our climate related investments by 50% compared with the previous year. I think this is a very good indicator for us to share our achievements with our customers. They can see definitely we need to disclose this result next year. Then our investors, our shareholders can see our journey, our achievement. At the same time, achieving this is also a challenge for us. And not only that, this behavior incentivizes also. Therefore, setting objectives and disclosing objectives are very important in this journey. Both will critical in achieving our overall targets.
It's been a great pleasure, Lalith, talking to you. These past chats on our podcast series on sustainable transformation and remuneration-linked climate performance. So good luck with all your endeavors and thank you very much.
Thank you, Kumar. It is our pleasure. Thank you.